Hello and welcome to the third of our Minds and Money 5 at 5 shows, and the first one taking place in the European time zone. The aim of 5 and 5, which is 5 guests at 5 p.m, is to maintain engagement between investors and the mining community to a lively interactive format during the current situation. In a moment I'll be introducing the host for today, but before that, just a few admin announcements. To make it as interactive as possible, please have your video screens switched on. We'd like to see you, and we'd like to see the interior of the study or your living room. Make it as interactive as possible. And we also encourage you to ask questions throughout today's show. You can either submit them via the chat function, which you'll see at the bottom of your screen, or also if you go into, you can also go and submit questions via the participants button, and you can go and wave your hand. I will unmute you, and you can then ask your question live. We will also be having polling questions throughout the 5 at 5 session, where you can go and vote. And being 5 p.m. and towards the end of the week, we also encourage you to bring along a glass of wine or beer to relax, or in my case, a very large glass of Pimm's to relax, sit back and enjoy. For this week's show, we have a star-studded lineup of guests. So to introduce them, I'd like to hand you over to Jochen Staiger, founder and chief editor of Commodity TV, a pioneer in online mining channels with over 1.2 million viewers and counting. A warm welcome to Jochen.
Yeah, Andrew, thank you very much. And welcome to everybody joining us here. Now we are at 90 participants. That is really outstanding. And as I'm in Switzerland, I have already 6 o'clock, but this counts also for 5 by 5. As Andrew said, we want to have it as fun and interactive and hope that everybody has made sure he is fully equipped with alcohol. And before I introduce the panelists, we should have the first polling question. And Mina, can you please bring up the question onto the screen here?
Yeah.
I'm surprised how many
really
people
cool.
think that
So,
you are teetotal.
The teetotal really kills me, absolutely. Tea only in the morning and only when I'm ill. Yeah, whilst we are voting, let me briefly introduce this week's guest. First of all, we have Paul Cronin, the CEO of Adriatic Metals. Then we have Jeremy Wrathall, the CEO of Cornish Lithium out of the beautiful Cornwall. Just watched a nice movie yesterday about that. And Amanda Van Dyke, portfolio manager of South River Asset Management. And last but not least, Ross Alistair, head of mining from Peel Hunt. Also, welcome to you guys, especially. And let's see how the results are in here. Have you stopped the polling?
Yes, I've stopped the polling, so they should be up on the screen.
Honestly, you guys were quite close with the red wine because I am a red wine drinker heavily. But today, as I discovered that COVID-19 gets killed with gin and tonic, I thought gin and tonic is much better. So all to that, cheers, guys. Yeah, cheers. Let's make the drink. The drink is so healthy, it's wonderful.
Jochen, alles schmeckt so gut.
Alles schmeckt so gut. Who was that? So let me.
It's Robert right here.
Ah, Robert, hi. Great. Yeah, okay, so the polling results were very good because gin and tonic and red wine are my favorites, definitely. Let me now hand over to Ross Alistair from Peel Hunt. Ross leads the Peel Hunt Metals and Mining franchise, providing sector expertise and ensuring firm-wide delivery. The Peel Hunt team was awarded Mining Broker of the Year at the 2018 Minds and Money London show. Ross, now over to you.
Yeah, thank you, Jochen. Look, there's obviously a myriad of topics that you could cover based on what's going on in the market in the last month. I'll try and touch on a few of the key ones that we're seeing across the market and then specifically within the mining sector. I guess taking a step back, I think at the end of February, start of March, what we saw was a fairly significant retail sell-off. At that point, there was limited kind of institutional selling. But clearly people weren't going to be buying in the market given the uncertainty that was going on. So that probably lasted for about 2 weeks. We then saw investors positioning themselves for inevitable kind of rescue fundraisings, reflecting what we've seen in previous downturns. And in order to do that, they were selling down periphery positions to build up cash positions. And we saw institutional investors with kind of 10 to 20% positions in cash within their portfolios. And subsequent to that, we've seen a number of fundraisings come to the market. So there's been £1.5 billion raised so far since the middle of March, principally for domestic consumer and industrial companies. And I guess two broad themes across those fundraisings have been equity being raised to shore up balance sheets, or for companies where they're looking to raise cash so that they can come out of the other end of the lockdown or the current crisis and look to be consolidators and pick up competitors. Almost all of those fundraisings have been backed principally by existing shareholders. And I think that reflects, again, the fact that the portfolio managers have been looking at their existing portfolios and seeing where they need to support those companies. And there's not been a lot of new money coming into those deals. We've subsequently seen a rally, again, quite a substantial rally in the market, based on green shoots coming from China and from potentially other jurisdictions as well, as they kind of retool, and the potential for lifting of lockdowns and the stabilizing of COVID numbers in terms of cases in the West. I would say that fund managers have been incredibly engaged over that period. Certainly our sales desk, our sales trading team have been able to speak to PMs on a very regular basis. And we're actually seeing a number of them now come to us and say, look, if XYZ company is coming to the market, we will be there for that fundraise. And I guess they're being more open than you would normally see them be in terms of their positions and where they want to end up. Within mining, I think it's uncertainty more than anything else, which is the key theme for me. I guess we've not seen as much capital market activity, and I think there's two reasons for that. I think first, balance sheets aren't in a terrible place. I'm generalizing, but for the most part, I think companies are relatively well positioned to weather any kind of lockdown restrictions, but that's clearly subject to how long those lockdowns are and the impact on the supply chain when we lift those lockdowns. I think as well there's probably a lag for the impact of coronavirus on mining companies versus the West, just because they're typically located in emerging market countries, which haven't been hit by the virus as much as yet. So there's been limited capital raising in the sector so far. The focus with our clients is really trying to support the messaging in the markets and how they're dealing with the virus, whether that be because they're in a lockdown. So obviously clients in South Africa and Spain and other jurisdictions are subject to lockdown restrictions. So they're either having to put their mines on care and maintenance, or they're having to operate at reduced levels. We've clearly there's been lots of companies that are suspending guidance because they don't have the certainty about where they're going to get to on the full year. Companies considering whether or not they're going to maintain, cut, or suspend their dividends if they're in the fortunate position to be able to be paying them. So yeah, lots of uncertainty out there with mining companies. I think talking about specific commodities, I think the gold miners are in a pretty good position. We've seen a lot of interest when we have been speaking to institutional clients in that particular sector. Clearly a strong gold price at the moment. People are looking at copper and base metals, but I just don't think they have the conviction to stand behind those investments at the moment. But I think that will come as we see greater kind of clarity in the market. And I think copper, we've seen, I guess, the price rally in the last 4 weeks, quite a strong rally. And I think that's really due to people looking less at demand destruction from the restrictions in China and more supply disruption in terms of the larger copper producers and other base metals producers shutting down. And otherwise, I think everyone's probably in the same boat, but working from home seems to be the new norm. From a corporate finance and banking perspective, it's actually working far more smoothly than I think people potentially expected. We've done about 40 roadshows for companies over the last month, clearly virtually. So that's all working fine. We trade about 10% of all volumes on the London Stock Exchange, and our trading desk are all working from home, which I think is a big achievement as well. And I think it's probably easier from a corporate finance perspective to sit at in your home office and work as well. And it seems like our clients are doing the same. So yeah, I mean, that's my initial observations, and obviously happy to answer any questions.
Super, Ross, thank you very much. I think as we are all sitting in the same boat here, there's a great question from Peter Hambro. Why is no one focusing on the reports on a lack of deliverable gold in London and on COMEX? That's exactly what I heard too, that approximately, I think it was 3 weeks ago, like 309 tons shall be delivered, and nobody knows if that would be exercised, from where that comes.
Yeah, I think it's a very good question. I'm not sure I'm the right man to answer, unfortunately. I mean, as I said, I think we're very positive on gold. Gold's clearly had a good rally pre-coronavirus, and things at the moment in terms of the impact of the virus, US interest rate cuts, etc., are only going to support the gold price. We don't think it's a temporary coronavirus trade, and we think that the gold price is going to be sustained, if not significantly increased, over the next year. So. Investors that are looking at gold mining equities will take that into account, but I think they'll probably just look at the spot price in the first instance.
There's also another question from Chris Hind. I hope I said it right. Hasn't metals consumption simply been delayed rather than lost? So can we expect a big price recovery in the second half of this year? Meaning like we don't have the supply now, but we do not have the demand now, right? Because everything is shut down.
Yeah, I think that's absolutely correct. And I think what we're going to see in the second half of the year is huge stimulus continuing. And particularly in China, and I think they're going to be spending a lot of money within China on infrastructure projects, which are clearly going to lead to further demand for particularly base metals.
Absolutely. There's also one from Melinda Moore. I like that. Why haven't any miners been beefing up their balance sheets for M&A? And I think that's always the question, right? M&A always works on the top of the market, funny enough.
Yeah, I just don't think. I guess there's a couple of points there. So firstly, on M&A, I don't think we're going to see a huge amount in the near term, and the reason for that is that clearly people need to do technical due diligence. So what we're hearing from people is that because of the travel restrictions, obviously you can't do that. And I think that's the same from an M&A perspective, but also a strategic investor and private equity perspective. So I think people are probably doing a lot of desktop work and will probably push site visits out to the end of the process. But I do think that will mean there's a lag in terms of deals that are completed. I think coming out of or coming away from COVID, I think we'll see principally in the gold mining sector further consolidation. I think there's a number of people that are well positioned to do that. I think in base metals and others specifically, I think there will be M&A, but I think it will be more case by case, because I think there'll be certain companies picking up the more distressed assets that are around. But I don't think people are necessarily, I don't think they have the balance sheets at the moment to be able to do deals. And I'm not sure that there's a huge amount of capital in the market that's going to be thrown into M&A deals, put it that way.
Yeah.
I
saw
sorry,
Amanda. Amanda, you have raised your hand. You wanted to say something?
I also think that in terms of M&A, just like M&A always gets done at the top of the market and everyone says why, it's because that's when the cash is around to do it. Let's remember that in the gold space, even in the gold space, a lot of gold mines have been turned off. And while I'm sure they'll do very well when they get turned back on in a few weeks, right now it's pretty hard to beef up your balance sheet with cash when you're trying to keep your furloughing staff and you're trying to keep everything going and you're on quasi care and maintenance. It's even worse for the base metal miners, because their demand, because all the manufacturing's dried up, their demand has dried up, as well as they've had a number of companies have had to close down temporarily. And that makes beefing up a balance sheet difficult. The reason M&A gets done at the top of the market is because that's when there's cash available to beef up a balance sheet, unfortunately.
I think that's right. And I just to add to that, and going back to the point I made earlier, the generalist guys in the UK are looking to support their existing positions. There's not a huge amount of cash deployed by generalists into gold mining or mining in general at the moment. And I don't think mining companies are necessarily top of the agenda. That said, I mean, there are clearly individual situations where I think there are companies that are well placed to look at M&A. Sentiment, for example, have a very strong balance sheet. And I think we'll probably re-rate over the next few months and could easily go out and undertake a deal.
Yeah. Sorry, Andrew.
Yeah, I think we can maybe squeeze in one last question. I want to try to bring in Michael Colligan from Blue Lake Advisors, who's live on the line. Michael, I think you had a question for Ross and the panelists as well.
Yeah, it was just isn't the lack of fundraising in the mining sector due to the fact that only a few companies could even raise money in the current environment, and they don't need it. That's why they can raise money. The rest of them that need it couldn't raise it. It's really very simple.
I don't like to generalize, but I think that's probably fair. I think the guys that are followed by institutional investors in London are followed because they've operated their businesses prudently. They have probably got strong balance sheets and are not in a position where they need to go out and raise capital. And they're the ones that would be backed strongly by the market here. Whereas the other ones that are more distressed are just not going to be investable for institutions here at present.
Yep.
Right.
Okay, super. Thank you very much, Ross, because time is running and we are already delayed as always. Now let's come here to the second poll of the day, but I don't know, we lost Mina. She should upload the poll now. Mina, can you hear me? That's a bit funny. Otherwise, I do it like via hand raise. That's also easy, no problem. So as Mina, we have lost Mina. That's our technician. That's good. So ladies and gentlemen, what will be the biggest impact of COVID-19 on mining? First answer. Here we are. Super. Okie dokie. So how can I vote, by the way?
You should be able to just click on. I think that people figured out how to vote.
Okay.
So obviously you've got 5 choices: gold prices going up, rethinking of mining supply chains, more automation and remote working, more M&A and consolidation, and less focus on ESG.
Yeah. Well, less focus on ESG is for sure. Okay, that's interesting.
Should I close the poll in about another 10 seconds, Jochen?
Yeah, that's fine. And yeah, whilst you guys are voting, let me introduce our second guest. His name is Paul Cronin, and he's the CEO of Adriatic Metals. Paul was also the winner of Mines and Money Best CEO of an Exploration Company at last year's Mines and Money London Awards. And Adriatic Metals also won the Exploration Discovery Award. And yeah, welcome to Paul Cronin. Welcome, Paul. Well done, as I had the honor and pleasure to interview you right after the award last year. And you guys have done really an outstanding job here. So the polling has ended, I think.
Yep.
Is that correct? Okay, super.
Yes,
so we have 32% gold prices going to $2,000. That's also my vote. I think actually 2,350 for next year. That's the minimum. Rethinking of mining supply chains has won with 35%. Okie dokie, here we are. Well, that's interesting. Supply chains is a big thing. That's right. So now I stop this here. Voila. Good. Are we finished with that? Whoops.
Yep.
No. Share results. What do I have to do? Mina, can you hear me?
Oh. Yeah, no, I've stopped it.
Share results. There you are.
Yeah.
So if you have the screen,
how can I get rid of that?
So the stop share should be off now. Let me close it.
No, I still have it. Okay, super. Perfect. All right. Yeah, Paul, then I would say the floor is yours. Please get us the insight.
Oh, look, well, we're still very busy. I mean, we've made all of the right preparations for the impacts of COVID in terms of people movement. We managed to get an additional drill rig into Bosnia before the borders closed, and we're still operating there relatively unaffected. Most of our drill contractors are on on a rotation system. So some of them have had to leave Bosnia to go back to the home countries of Serbia, Macedonia, Bulgaria, and we're obviously having difficulties getting those in, but we have been able to substitute them with local drillers. So from an exploration perspective, things are still moving ahead quite freely. What we have been able to do is start to refocus some of our more office-based resources here in the UK, where people are mostly working from home, and apart from me, and really pushing forward on some of the work that we're doing on our PFS with the Zenko, some of the work that we're doing on our ESIA, and starting to look a little bit further ahead in some of our planning in terms of our HR and human development strategies, in terms of our procurement approach moving forward, and looking at some of the suppliers in Bosnia that we think will be able to supply some of the materials we need for construction and ongoing operations. So we haven't been impacted, and where we have been impacted, we've been able to redeploy resources to try and get things done that we ordinarily wouldn't have done quite at this stage, but we've advanced them.
Fantastic. Thank you very much. That was very fast. Great. I have a question here first from James Asensio. And the question is, Bosnia is a relatively unknown jurisdiction for mining, but you seem to have made good progress in building relationships with key stakeholders. Can you comment on the process you are going through to get your outstanding permits and expected timelines?
Yeah, we are the only public mining company in Bosnia. But there are a number of mining companies in Bosnia. There is another British company in Bosnia that is privately owned, that is operating 2 mines in the country, and in fact permitted their Olivo mine, which is about 15 kilometres away from us, last year. But there's also a very active coal mining industry in Bosnia. Electricity is Bosnia's biggest export. And so between their hydro capacity and their coal mines, they're fairly active in that industry. In terms of where we are, obviously we have had a lot of success in dealing with government. The recent issues around COVID and the restrictions on people movement have made our interactions with government change and probably become less frequent than we would have liked. So, for example, we are looking to hold a public meeting on our mining permit relatively soon. At the moment, right now, public meetings are not allowed. And so we've talked to the government about technical solutions for that, using systems like this, where we can have that public meeting. However, we expect that given the decline in growth of coronavirus in the country, that these restrictions will be lifted well before we need to have that public meeting. But we are continuing to progress our permits very effectively. We found that a lot of government staff have been either furlonged or asked to take extended leave during the current period, and that's had some impacts. But the one thing that we do know about the Bosnian government is they will try and do anything they can to help you, and that's not government as a whole, that's government as individuals. And they will, if you say to them, look, we need you to respond to this, even if they're on leave, they will typically respond. It may just not be, in the same time frame that you would have expected if they were ordinarily at work. So, as a jurisdiction, Bosnia has an active mining industry. Those mines were permitted. The mining code is quite similar to what we see in normal mining jurisdictions. It does, however, have an unusual system for granting of exploration concessions, which we've explained a number of times. And over the next little while, we'll be making some further announcements on that.
Fantastic. Yeah, I think Andrew, Rob Schaefer has a question. If you can unmute him, please.
Rob, I'm just going to unmute you now. So the floor should be yours to ask you. You should be able to ask your question. Oh, we may have to read out Jochen's question. I'm trying to unmute Robert, but apologies to Rob. Maybe you could ask out his question, Jochen. Okay, Rob is actually on the line now, Rob. Sorry.
Okay, I've been making comments to the group chat rather than asking a question. Sorry.
It looked like. Sorry. Okay, good. No problem. Fine. Yeah, any more questions here from the audience? Otherwise, I will ask one. What do you have?
I can ask one if you like, Jochen.
Yes, please.
I'm probably the only person on this call that's not a fan of the gold, but I mean, I'm perhaps a bear of little brain, but I think gold has been disappointing. I mean, it was trading at a little over 1650. Of course, despite what all the bulls were saying, it collapsed on the outbreak of COVID-19 to below 1500. And yes, it's come back up above 1700, but that's not much above where it was to start with. And the world's in the worst state it's been for about 100 years. When the industry, all the other metals come back in the second half, gold surely will decline in price. Why on earth does everyone think it's going past 2000?
Because my chart is telling me that. Paul?
I don't think that's a question for me, given I'm not I don't run a gold mine. But
well, it's probably for everyone on the call, and I know, and I'm in a minority because I was at PDAC not so long ago, and of course everyone was talking up the gold price. But I think it's been disappointing in these circumstances.
Why don't you?
I'm a gold agnostic, so I'm not too far off. It is what it is. I don't see any logical reason why it should go to 2000. But then again, there's no logical reason for the price of gold at all.
I can give you an answer for that, actually. The reason it goes down, in every major recession in history, the gold price goes down. When there's a massive crash, gold goes down with everything else. That always happens. And one of the major reasons it happens, despite how high it was before COVID-19, is because there's margin calls. When you're getting margin calls left, right, and center, and you're losing money because the market's crashed 30%, and all the leveraged guys are caught out, they're going to take profits in the only thing they've got profits in, which is usually gold. But it's also always the first to recover. It's actually following step by step exactly what it's done in the last 4 major market corrections. And if it continues to do that, especially, it should, we're kind of jumping ahead a little, but it should probably get us to 1900, 2000 by year end. Understanding, of course, that this correction in the markets, if you look at historical correlation, which isn't necessarily an indicator of future results, but if you look at the financial crisis, the dot-com crisis, it's when interest rates are slashed and real rates of return have gotten to where they are. And also the correction never happens at once. We've had the first leg of this correction, but it's not over yet. If the last 5 recessions are any indication whatsoever, it'll be 6 months till this market truly bottoms. And if it's truly going to be the worst recession in a century, as people are saying, the blood's not finished. The blood's not all on the streets yet. And there is an almost perfect negative short-term correlation between the stock markets, the American dollar, and the gold price. So when they go down, gold goes up. And when real rates of return, which based on all of these slashed central bank rates around the world go down the way they have, gold goes up. So this is actually almost formulaic for gold. And that's why there is a future to gold. Does that mean there's a long-term future above 2000 for gold? No, but in the short term, it's a wealth hedge. And in the short term, if gold is where you want to be before other commodities will only start coming back into play when we see green shoots of a new economy coming. Because the general commodity, the demand for gold is based on the lack of demand in the rest of the world. It's a hedge. It's a wealth preserver, right? It's a fear. Gold is fear in the markets. Whereas
and insurance.
Yes, and wealth insurance, as it were, which is why it's going to continue to go on while we're in the worst throes of this recession. Once we see green shoots of a new economy, once we feel like we might have bottomed, which nobody's sure of yet, that's when the rest of the commodities will return. And normally, a gold bull market is followed by a commodity bull market. because that's when the marginal difference of new factory orders and all of the world turning back on and all of the rot in the economy being sort of swept away has the biggest marginal difference in demand. So I would be very excited, answering Chris, I would be much more excited. I don't think H2 is when the basic commodity complex comes back. I think 2021 is when the basic commodity complex comes back, and the end of this year is probably when gold peaks.
Mm-hmm.
That's my sort of personal opinion.
Yeah.
And if we're going to go sort of back into it, where I'd want to be in gold right now is in the near-term developers, because they've got the best marginal returns, like stuff that's in the GDXJ or smaller stuff that's not quite in the GDXJ. But I'd be staying away from the large producers. Have already peaked. I think the real marginal returns is going to be in the near-term developers. That's where I'd be in the gold right now.
Yeah.
And the polymetallic assets in Bosnia.
So that's what I wanted to say. Paul, one last question.
Lithium in Cornwall. Yes.
Yeah.
yeah, exactly.
And Paul, one last question for you. I mean,
Sure.
you have a very low capex on your project. When do you think, with all the permitting and stuff, and now given the fact that everybody is really delayed, that you are in a, let's say, in a mining jurisdiction, which is not the real professional jurisdiction in that sense, not that it's negative, but mining is not that large industry in Bosnia and Herzegovina, or even Serbia or Croatia. What do you think would be the timeline to go in production?
Look, at the moment, we're planning to commence construction in Q2 next year. So we're looking at production either late Q2 2022 or Q3. There's a number of things that are going to affect that, and the first one is our exploration results. At the moment, you know, the drill core that we're seeing would indicate that we need to do more exploration. But we are making substantial progress on things like our EIA, our PFS. So I don't think we're going to see a major flow on into the critical path. But I'm quite happy with the way things are going at the moment, even if that does mean that we're delayed by a couple of months. I think the end result will be better.
Super, perfect.
We just got one more question from. Sorry, Jochen. We've got one more question from Daniel Fox Davis. Daniel, I've just gone and unmuted you, so you're free to ask your question.
I'm sorry, that was actually, I was just trying to figure out how your system was working here. But no, only what I was going to add actually that I agree with Amanda. If you look back, there was some interesting work put out by the Wall Street Journal that on average it takes 52 weeks from the bottom of the trough to recover. If you look at every recession in the States going back to 1812, the larger one back in the 30s took a total of 33 months to recover from the trough. So I think you have a lot further to go in the falling from here until you get a proper clarification about how economies can come back. I think the US will continue to go badly, and then you're going to have another 24 to 36 months until we recover, which is why I think in the absence of anything else that you're going to look at, you'll go to gold as a safe haven. But I'm sorry, it wasn't really a question. I was just trying to figure out how anybody else had asked a question.
Okay, super. Thank you very much. One last question to Paul. Are the plants in your background smokable?
Do you know, they're plastic and I'm not going to try.
Okay, don't do that. Okay, so I'm just joking. Hey, thank you very much, Paul. And we go over now. Let me introduce our next guest here, Amanda Van Dyke, Portfolio Manager, South River Asset Management. And Amanda has been previously with the mining teams of GMP, Pareto, and Dundee Securities. She's also a former chairman, or should be chairwoman, of Women in Mining UK. So, Amanda, floor is yours, please.
Hi. Well, I sort of jumped my spot a little. Generally speaking, in the mining market, I agree with Daniel. I think we're not finished yet. The market has, in market terms, we haven't bottomed yet. This recession has time to play out, and while we're in recessionary mode, I do think gold is the place to be. I would be picking my spot. I would be actively investing in developers. I'm also personally actively investing in what I think are the best value base metal guys, because I do think base metals will start coming back in 2021. very significantly. And to get the best spots, you're probably going to have to move now, because base metals have already moved off the absolute. It's my experience that gold, COVID's changed this a little, but in terms of the levels of gold and commodities, gold is usually a year ahead of base metals. So gold bottoms a year ahead and it peaks a year ahead. This might have extended that a little, and it's going to make the gold bull run a little bit better, because it's the severity of how severe this recession and correction is going to be will make gold peak a little higher in the short term. But nonetheless, commodities were due for a correction. I just think it's extending what would have been a year-long timeline to a year and a half, 2 year timeline. But I would be heavily in gold developers, because this is the part of the cycle where when they've got the best chance for you to get into, like good developers, the best chance to make money in them. And I would also be looking at the best value for money, lowest place on the cost curve, good, like cherry pick the best base metal projects that you know of, and strategically start putting money into them. Because, you've got 6 months to wait, but it's going to be given how far commodities have been hurt, the general commodity base metal complex, they will recover, and they will recover well. And you need to be positioned earlier rather than later. I was positioned earlier in the larger golds. I'm now moving towards the development line for gold and cherry picking what I think are the best quality base metals.
Amanda, one question already from my side. What do you think about copper?
Dr. Copper is pretty good. Copper is a major. Copper has always, 2020 was always when copper was supposed to turn and demand was supposed to go up. COVID is going to push that out. The demand, it's pushed out the demand for everything, because the whole world got turned off. And the demand for base metals is based on making stuff. And when you turn off all the factories, you don't need stuff, other than maybe agriculture. I do think that copper, it is Dr. Copper. When copper recovers, the base metal complex will recover. It's the indicator. It's the major base metal indicator. And I think you'll see it creep back over the next 6 months. But I do think 2021 will be the year where you see the real gains in the base metal complex.
Mm-hmm. And Mike Kenwright, and Mike Kenwright is also asking the same question as I wanted to ask. What's about uranium? Because uranium did a breakout today in the chart.
Well, yeah, but there's two. Interestingly, there's two reasons for that. One of the reasons for that is Cameco turned off production. Cameco put its major mines in Canada, like one of the largest producers in the world, onto care and maintenance. So the amount of uranium, uranium's been stuck at $25 for like 3 or 4 years. And when you take off 20% of global production, that's what's going to happen in terms of a jump in the uranium price. Is that sustainable? I'm not 100% sure. Nope. Interestingly, one of the worst performers in London, I was yesterday, I think, was the Geiger Counter Fund. Interestingly, right before the uranium price went nuts today, the Geiger Counter Fund fell off a cliff yesterday. I'm not sure if it's back yet, but I would definitely say that I've been the longest uranium bull on the planet. Paul's gonna make fun of me. I mean, the uranium price makes no sense to me. I think it should be a lot higher, but I have been long and wrong uranium for a very long time, to be honest.
Me too.
I like uranium. I think it's got legs. You see periods of, it's a bit of a boom and bust commodity, and you see these periods of long busts and short booms. And I think that we've had the bust for long enough now that there's probably something's going to happen, but it is fundamentally going to be supply driven. We're already seeing a number of large uranium mines coming offline and going into permanent shutdown because their grades are so low. But with Cameco now curtailing a lot of production, I think it's made the industry sit up and really think about, how good is our security of supply, and I think this will put, I don't think a rocket under the uranium price, but I think it's going to be moving it back closer to, to a midterm marginal cost. The problem with uranium, of course, is it takes so long to produce to get a uranium mine going. It's typically around 15 to 20 years. That supply isn't going to be easily replaced. And there's only a couple of projects out there that I think could come into production in the next sort of 4 or 5 years. And of those, which ones will be economic? Probably only 1 or 2.
Mm-hmm. Amanda, there's also a great question from Michael Colligan. Investing in gold via streams and royalties as an alternative to mining companies. For example, we saw last week Osisko Gold Royalties got $85 million from the government of Quebec at a 10% premium and no banking fees. So it's closer to 15% premium. What do you think?
Look, there's been a bit of around a year and a half ago, suddenly there was a lot of new royalty and streaming companies being listed. And I think I've seen there used to be 5 of them. Now there's probably 10 of them, and probably another 10 have been recently listed or gotten some assets. It's a very popular place to be. It's easier to understand, and it's a bit more of a cash flow than taking the risk on an individual mine to buy a junior. It's not a bad place to be, but like everything, you need to do your homework. You need to understand the underlying royalties and their chance of producing at what commodity price. So having lots of royalties that are producing at a very low price environment, or that are 10 years away from, you can have lots of royalties in your portfolio, but if they're 5 or 10 years away from production, that doesn't really help you in terms of cash flow.
Yeah, who cares?
So like everything, it's not a bad, royalties and streams are a good place to invest, but you need to really look at the underlying assets within the royalty and streaming companies. I would also say that Osisko Royalties itself, it's a bit of a misnomer. I would say maybe a third of their portfolio is actual royalties. They actually, Osisko Royalties is not just a royalty company. It's like a diversified mining investment company that has a lot of royalties and thought it would start. It started off with the Osisko royalty in it, but they have between 10 and 50 and 100% holdings in a bunch of mining companies. So it's kind of like a diversified mining investment. So I don't think you can see that investment in Osisko Royalties as an endorsement of the royalty space. I think you can see it as an endorsement of a very good company with a lot of assets in it and that is diversified in its asset base.
Mm-hmm. Okay, super. It's time is flying. Thank you very much, Amanda, for your comments and answering the questions. We should head over, Mina, to the next poll number 3, please. Which battery metal are you the most bullish about? Mina, can you raise the poll, please? And we have cobalt, copper, graphite, lithium, nickel. So please place your votes. That's interesting. Super. So whilst you guys are voting, let me tell you a little bit more about our final guest, who I'm sure will be telling you why you should vote for lithium, probably. Lithium is, it's number 4 now. Jeremy Wrathall is the CEO of Cornish Lithium, one of the most exciting lithium projects which aims to be both environmentally sustainable as well as capitalize on the historic Cornish mining region. And Jeremy, you get the floor here in a minute when we are ready. So can be shared? Can be
there should be the polling should be on there now. So you should have copper in first place on 34%, nickel on 27%, and lithium on 20%. So I'm sure that Jeremy will be wanting to convince us why more of us should have voted for lithium.
Absolutely. So Jeremy, the floor is yours.
Thank you. Thanks, Jochen. Just really give you a bit of background on my company, Cornish Lithium. We are exploring the historic mining region of Cornwall, where In fact, lithium was first discovered in 1864 in brine, which is flying into the old mines. It was a big problem for the old miners because it was coming in very hot. They analyzed it in 1864 and identified it as a potential future opportunity. And since that time, since we've been looking in Cornwall, we've also found that lithium was mined in Cornwall during the Second World War, just near St Austell, and we're also exploring that hard rock project. So we've conducted two major drill programs over the last few months, two deep drill holes for brine and 41 drill holes for hard rock lithium. And we're also very actively looking at the opportunity for base metals in Cornwall, following what I'm sure most of you have seen, which is a huge hit of copper that we drilled in one of our brine hills, which is in Strongbow's mineral rights. It's actually their project now, but an amazing hit of copper. So it really just goes to show that intersection, which is 14 meters at 7% copper and just over % tin, that still shows you what Cornwall is hiding in terms of opportunities. There's been no exploration really done in Cornwall for about 40 years. So it is a massively underexplored mining province. There were something like 3,000 historic mines there for copper, cobalt, nickel, tin, almost anything you can imagine, and obviously lithium. So we're very excited about our program, and we're making good progress. We were lucky enough just to finalize our 2 drilling programs just before lockdown. So our staff are now analyzing all that data and are actively working on it from home. It works extremely well for us.
Fantastic. Thank you very much. Are there already any questions? Here, Damien Walsh, what are the chances of permits to mine in Cornwall? 2 question marks.
Hi, Damien. Great question. Very, very good, because you've got a major mining industry in Cornwall already. We mine about 1 million tons of China clay, kaolin, per year in Cornwall from very large open pits. You can actually see them if you look on Google Earth. It looks like somebody splashed paint across Cornwall. Those are the very large open pits for China clay. Very active mining industry still. That's been operating for well over 300 years. Also, you've got an extremely supportive local council. Cornwall Council is very supportive of mining and metal extraction. And also, this has gotten right up to the Prime Minister himself, who mentioned that the government is well aware of the lithium in Cornwall and plans to exploit it. That was mentioned in Prime Minister's question time about a month ago. So I don't think we should have a problem as long as we're very careful with the environment, etc., etc.
Then we have Nick Clark. What is the estimated true width of the intersection announced by Strongbow? There was a beautiful news release here today.
Yeah, thanks, Nick. The estimated true width, I can't really comment on that because it's now up to Strongbow to ascertain what the true width is. But it was a very vertical hole, so I think it's going to be narrower than announced. But I can't really comment because it's more their issue than ours now. But certainly it was an amazing intercept, and some of the intercepts were well over 20% copper. Three areas were well over 20% copper. But I have to say that, Nick, as you will well know, that Cornwall, 7% copper in Cornwall was not unusual. And there were many, many mines operating until about 1870 that were mining 7% copper and above. So there's still plenty of prospectivity left in Cornwall.
Fantastic. Also a question from my side shortly. Can you comment a bit on the longer term outlook for the lithium market maybe? Because we just had this talk upfront here, and I think let's say plug-in cars, hybrid cars, etc., we need many, many more of those because of the new emission laws in Europe from next year onwards, and the car makers are in big trouble, and they really have to sell like approximately 60-70% of their production this year and next year in this type of cars. So do you anticipate, let's say, okay, COVID-19, the thing is done, we can go back to normal, I don't know, by July, August, hopefully, with the production? Do you think that we still can hold those positive outlooks we saw by Goldman Sachs, JP Morgan, Deutsche Bank was super positive on the lithium markets? What's your view as you are working in the industry?
Look, I think that is the question that's vexing everybody. One thing we've learned through the COVID crisis is that we're all enjoying air quality, which is significantly better than it was before the shutdown. That's been a reminder to everybody that not only does COVID kill a lot of people, but nitrogen dioxide and other air pollution kills even more people a year. So are we going to stop going to electric vehicles? Absolutely not. It's too late to back off. And then it leads us to another question. Is Europe going to lead the way in electric vehicles, or is it going to let China carry on? Because China obviously is determined to lead the way in electric vehicles. But Europe really has to carry on. Europe has got no supply of lithium whatsoever. And really that's a massive problem. It leads us to another question is the world going to reevaluate its supply chains now that COVID has happened? Can we rely on supply chains which are thousands and thousands of miles long and can suddenly be cut off in an instant as China or somewhere else shuts down? So I think really there's a huge number of questions to answer, none of which we know the answers to. One thing we do know is that Europe is in a very precarious position as it supplies technology metals.
Absolutely. Yeah, if we look at the Tesla battery, before the lithium comes into the Tesla battery, it's already had a weight of 50,000 kilometers. So that's also really crazy. Yeah. There is a question, hang on, from Jacob. Jeremy, what are your plans to test your lithium ore for battery chemicals usage?
Great question. We are not going to try and reinvent the wheel. We're talking to a number of technology providers in brine, direct lithium extraction providers. Many of you will be aware who those are. I'm not going to mention them on here, but we have a number of parties we're talking to who have been studying direct lithium extraction from brine over the last 5 or 6 years. And in regards to our hard rock project, we're also talking to several providers of environmentally friendly methods to extract lithium from hard rock, particularly zinnwaldite. So the lithium mineralization in hard rock in Cornwall is very similar to the Zinnwald project or the Synovec project in Germany and Czech Republic. So we are very encouraged by those conversations, and we hope to be putting a pilot plant in Cornwall certainly for brine by the end of this year, and hopefully for hard rock. We're certainly having some advanced testing going on for hard rock as well.
Okay. Yeah, any more questions from the audience? Raise your hand if you like. Otherwise, I have a question in between. How do you see the financing opportunities for your company?
Again, I think that's given a lot of people sleepless nights. How do you finance a small company, a junior company in this market? We are well provisioned in that respect. We have extremely supportive shareholders, and we are in discussions with them, obviously. But at the moment, we're not worried about finance at the moment, but I know that it is a question that's vexing a lot of people. I think my advice would be to go early, to even if you have to take a painful dilution, possibly. But really, we are evaluating all our options. But so far, crowdfunding worked very, very well for us last year. I'm extremely glad in this market that I'm not public, frankly.
Cool. Daniel Fox Davies raised a hand. Andrew, can you please unmute him?
I've unmuted him.
I don't know. Okay, Daniel, please.
I know it was just a segue in on the financing and projects. Actually, Jeremy, very good to see you. As the few people here that I know are aware, when I saw Fox this, I moved out to Dubai, and after several years of clicking my heels, I was looking around at how to keep us so busy. So I've spent the last couple of months looking at Islamic bonds and Sukuk financing, and talking to a number of the major investor groups out of here. Because essentially it's just asset securitization. And quite interestingly, you can take a development project. So I've been spending the last sort of 6 weeks looking at alternative sources of capital for junior oil and gas and mining companies, particularly where the banks won't be able to step in. And for those parties that have near-term projects, I'm currently talking to about 5 different companies at the opportunities of issuing Sukuk bonds into the GCC, because overwhelming about 85% of them are real estate, and there's a lot of capital sits in pockets and in pools, and London, it's all tied up and people are sitting with losses. But there's quite a phenomenal amount of capital sitting here in the region. I'm currently in Dubai at the moment. which is sitting in bond funds looking for yield. And it's very interesting the way the whole Sukuk mechanism works, in the fact that you can get ratings on the project, which you wouldn't necessarily get an underlying company. But Jeremy, I'll certainly reach out to you later on this evening if it's something that you're interested in.
No, great. Thanks, Tony. Thank you.
Okay, fantastic. Any more questions, announcements, whatever, contributions to this discussion here? Because we are now almost in time. Raise your hand if you like. You can do it at the participants. No? Okay, well then, thank you very much, Jeremy, also to you, well done. And also thank you very much to Amanda, Paul, and Ross, of course. And I think that was a great 55 minutes here with a lot of information. Thanks to, almost still 94 participants. That's fantastic. Mein gin tonic is empty, which is a real disaster. And I hand over to Andrew.
Okay, well, many thanks once again to Jochen, also to our four absolutely fantastic guests, and most importantly to all of you, the audience, for dialing in. I hope you all enjoyed it, and please do kind of like email me back with your feedback. Next week's episode of 5 to 5 is on Thursday, the 23rd of April, which will be at 5 p.m. Toronto time, which will be 10 p.m. British Summer Time, with another star-studded lineup, including Great Bear and also Bluestone. I hope that you can enjoy us for that. Until then, stay safe. Thank you very much.
Thank you very much to everybody. Stay safe and have a great weekend. Thank you very much. Bye-bye.
Thank you.
Thank you.